Okay, thanks for joining me again. I've been asked to run through some of the trades that I've had on my trade sheet during the week, explain how I got the levels, show my technical analysis techniques, try and help you guys understand and find your own low risk entry trade ideas for this week. Firstly, the other thing that I want to do is I've talked about this website before. Fund Your FX is an award winning prop firm since 2021, specializing in instant funded accounts. So you don't even have to pass a prop challenge. You can just get an instant funded account, which I think is tremendous. All you have to do is like, comment, and subscribe if you want to try and win an account from Fund Your FX this week. I've been giving one account away every week. If you want to go straight to a larger account, you can check out the link in the description. You'll get my affiliate link there for two-phase, one-phase, and instant funding accounts. Now, a tool that works out your risk versus reward. I found this called Magic Keys. It's actually a physical keyboard, but there's also a digital one for your screen. Works on MT5, C Trader, and I think some other trading platforms. This is literally the best thing I've seen. It's just one key to open a trade, close a trade, move your stop loss. You can preset trades whereby it automatically calculates your risk versus your reward, your trade size. This is something I've been looking for years. And you know what? I've even tried to create this kind of software before with coders, and I just couldn't do it properly. This is amazing. I've actually bought one for myself. I'm waiting for it to be delivered, but I'm going to experiment with the digital version next week. It's the answer to my risk discipline, because I'll be honest with you, I can't really be bothered to sit there calculating the precise contract size for every single trade, depending on how many pips stop loss I have, how many pips target I've got. It's ridiculous. I don't know what's wrong with MT5. I don't know why they make it so difficult, but this literally solves all of those problems. I would urge you to get one of these. And the best thing is I've got a coupon for a 25% discount in the description box. Click on my link and use the discount code. A few of my subscribers and followers have already got them, and it's very, very useful. Right, moving along. Let's have a look at my trade sheet. So this week, for example, let's take the trades that was triggered. The euro US dollar, I had a buy level. I've got it up there right now. 120, 112.80, 112.60. And we did dip to that level now. Very simple. In a bull trend. I'm a buyer in a bull trend. These are my moving averages, 50, 100, 200 period moving averages. Oh, this is the hourly chart. So of course they are hourly moving averages. Green is the 500 hour moving average. We moved higher, and I was expecting some sort of consolidation. That's normal. I wasn't expecting the market to turn around and collapse. So I put my fib levels on there, and I checked out my moving averages and came to the conclusion that this would be a good support level. Now, this trend line wasn't on there at the time because we didn't know that this was going to be the second low until, of course, we tested my buy opportunity, hit it bang on, and bounced off. And we hit the targets really nicely, actually. I had targets of 113.50, 113.90, no problem at all. 113.90 was a good target, actually, because that's as far as we've got. So what now? Probably a consolidation. We have an ascending triangle pattern here, which is normally bullish. So on Monday, I wouldn't be surprised to see the euro US dollar break above the trend line, which is around the 114.00, 114.10 area, and then probably push up to retest 114.73, which is the high of this rally. Then the question is, do we get a double top? Or do we break up above there for the next leg higher in this very strong bull trend? You can see around the 113.00, 112.90 area, we should have support again. Even if we do break below the trend line, even if we do break below the 100-hour moving average, we have some trend line support around here. So I will watch that around 113.30, 113.20, but I wouldn't be putting on a big long position there. I might use it as a scalping opportunity just to see if I can jump in around 113.30, 113.20 and take a quick turn around 113.80. I mean, that would still be a 60 or 70 pip profit. No one's going to say no to that. But I'd have a 20 pip stop on that and then see if we retest this, which is probably a bigger support level around the 113.00, 112.90 area. If we do continue lower, then I've got 23.6% fib at around 111.60. I quite like this level here because we've got a swing high up there around 111.44. So those would be the trading levels in the euro US dollar that I would have for this week. And those are the reasons why. Now, if we did collapse as far as my 61.8% fib around 110.15, we've got the 500-hour moving average down there and a really nice trend line, which actually, let's see how far back that goes. That goes all the way back to the beginning of March. So it's a decent trend line that has lasted almost 2 months. Nice trend line, 500-hour moving average, Fibonacci level. The price action doesn't really back it up actually, but I would definitely have to try a long down there for that reason. Another trade I had during the week was buying the euro versus the New Zealand dollar. Again, full trend. I was looking to buy on the pullback. Very simple on the 4-hour chart. Had a Fibonacci support around the 190.44 area. The price action was a little bit overrun on that, but no big problem. And then I had the 200 period moving average on the 4-hour chart. I had a really nice trend line here as well. So I had to try a long down there. We'd had a really good correction. I was actually looking for a double bottom pattern, and I don't think I really got that. But we did test the support level at around I had 190.55 down to 190.35 on my daily trade sheet. 90.00. We overran it a little bit. Where did we get down to? The actual low was 190.34, so that worked really well. It was within our buy range. These are ranges that I put on these sheets, so I suggest buying within that range. Of course, I don't know the exact price at which the market might reverse in a bull trend, so I give a 20 pip range just so that you can scale in to the orders across there. Maybe put 2 or 3 orders in. Drop below 190.00. We didn't get anywhere near that, and then the market did bounce. Where did we get to? 192.58. So we actually managed to achieve the target, 192.50. We beat that by 8 pips. Now, this was on the 15th of April, so it was midweek. By the end of the week, we were trying to break below that, but we didn't actually break the level, and we did manage to bounce, although we did overrun it, to be fair. Okay, the last trade I'm going to show you for today is actually a sell. Didn't want to just focus on the buys. So we had US dollar Canadian. 139.45, 139.60 was the sell range with a stop above 139.85. You can see that my stop losses are always very tight. In this case, it was a maximum 40 pips. Targets, 139.00, 138.50. Why did I choose that entry range, 139.45, 139.60? Well, it was slightly below the 23.6% fib on my chart, but we had this descending trend line going back to the beginning of January, which I thought was more important. So that came in at 139.60, and that's why I decided to give my entry point at 139.45, 139.60. I had a feeling the trend line would hold it. Now, in the end, I was actually wrong about that. We overran it. But of course, you give yourself a bit of room on the stop loss, and the peak was 139.77. We didn't get too close to the stop loss around 139.85. We certainly had plenty of room, and the market did turn down really nicely. A steady decline towards my target. 139.00, 138.50. Where did we get down to? 138.52 was the low. So, okay, we missed my second target by 2 pips, but I think we were all getting out of it around then. We had 1, 2, 3, 4, 5 hours hovering around that area for us to take the profit on the trade. So that worked really well. Interesting to note how the market then bounced to the 50-hour moving average. We're consolidating at this stage, moving sideways. I would suggest that if we do bounce at the beginning of this week, we do have good resistance around the 139.45, 139.65 area. So I would be trying another short there. The first time around, we got overbought on the slow stochastic. That was another good reason for me to enter the short position. We're already in a bear trend, of course. That's another good reason I trade with the trend without failed. Let's just see where that trend line goes. Yeah, no, that's not much use to us. But anyway, with trend lines, it's a case of trial and error for me. You never quite know until you put the trend line on there whether it's going to be of any use. That one actually, no, I'm going to take it off. I don't think that's going to be of use to me. Okay, there is potential for a double bottom here, although I think the fact that we failed at the 50 period moving average on the 4-hour chart is going to negate that. I don't think this is going to turn into a double bottom, but you never know. Okay, if you've got any comments or questions, if you've got any of your own analysis to offer me on these markets or anything else, do let me know. Remember, have a look at Fund Your FX and have a look at that Magic Keys. I'm looking forward to receiving my keyboard through the post this week. And if you do want my daily trade sheet of ideas with buy and sell entry ranges, stop loss and targets, it's all done for you. You don't have to do any of the analysis. I've been doing it for 20 years. I can have all this ready for you by 5 a.m. UK time, and then you can just copy my trades. And I also do provide a lot of written analysis. I do try to teach. I call it earn while you learn from me. And my subscribers do get to learn my technical analysis techniques while they're copying my trades and making money during the week. Okay, thanks for watching. We'll do another one of these next week.